here is my spreadsheet, right?
Yep.
I found the call side at 3:30 did the best at 2. And then I also found the put side at 2:30 did the best at 2.
Mm-hmm.
Just because, just looking at all the numbers, I feel like it had the best win rate with the best average win and premium with the best PCR and the lowest max draw. So what I did, and again, correct me on everything if I'm wrong. Definitely know I'm not an expert on this. So what I did is I put the put side at 2. And I played with, since it was weird for me that the call side was at 2, I felt weird about that.
This is max premium, right?
Huh?
This is the max premium setting?
This is at, let me see. I had it on the min premium.
Yeah.
And this is the trade I came up with, though. 50 wide, 50 meaning 50 wide, and I got a 46,000 profit loss, 8.9, 77% win rate, 96 ending capital, and total premium of 351.
Scroll down.
Huh?
Scroll down. How's this doing this year? Problem. See that?
Oh, crap.
It's not consistent.
All right.
So we do look at the max drawdown and the return and everything, but it needs to perform. So
makes sense.
The reason why this doesn't work is that these $2 and 180, when you get close to expiration, these are going to be in the money because the move's really small in the last half hour. So the slippage would be vastly more on this. So this is an example of a test that we use the same slippage for the entire time. You know what I'm saying?
Yeah.
And then also because if you had a $1 option versus a $2 option, we're assuming the same slippage, which isn't a fair comparison. The other thing too, and you don't know this, but during power hour, these options are going to go in the money, and gamma, which is the Greek that pays us, that's on the other side of theta, if you remember that from any of the courses you took, is at its max at the money and closest to expiration. So the actual slippage, if we were to trade this in real life, would probably be on average 50 cents.
50 cents. All right.
Yeah, because it would be even more because it's in power hour. So this is you would never know this, but this is just a real trading versus what would happen in real life. So usually we opt for a higher premium because that higher premium allows us to eat less money in slippage and commissions and fees. However, in power hour, the slippage is absolutely brutal when you're at the money because the market and the prices of the options move ludicrously parabolically quick. So that was something that I didn't mention in the assumptions with what's going on and stuff. So not something you'd be aware of. But if we did this as the skewed condor thing, it's that's what I anticipated wanting to do because skew is heightened at expiration. There's more skew on the put side than the call side. So I like that part of it. And I would say literally this trade at just $1 on the put and 80 cents in the call would probably be good enough for us to do.
That makes sense too, because if I'm looking at this one here, I found a really good one. This put one at $1.
Yeah.
I was like, this is a good base hit trade, you know? I did see that. So that makes perfect sense that you're saying that because this one caught my eye a lot, to be real with you. I was like, man, that's just a solid trade,
yeah. And I actually used to only trade power hour when I worked at Rippling because it was just easier. So just to give you kind of a notion around this, the reason power hour works so well is the dealers or the counterparty that are these options market makers. They need to basically submit their risk profile to their clearinghouse at 3 p.m. each day. And then also there's a bunch of people who are day trading or are doing, other random stuff that are going to need to close out their options at the end of the day. So there's a bunch of people trying to basically buy or sell options, and we can be there to take them to expiration. And then by doing that, the move the theta is just accelerated, so it becomes pretty nice. It's just a little more of like an intricate execution thing that will end up playing, but like this is basically why I said it, and it never makes sense what goes on during power hour. Like today, the market went down like 30 points and then returned back another 30 points up in the last like half hour of the day, basically. So I kind of like these trades because it's like there's just zero way you could ever predict what is going on. But basically what I would say is, we'll trade this at 3 and 330, and then that'll basically roll with it. Does that make sense?
Yeah. I did have a question though. Where I got thrown off on this one is, how do I do, like, so let's say I'm running this one, I'm moving this to $1, and I'm moving this to like 0.6, and I'm going down here and I'm putting my 330. How do I do 3 and 330? Is that just two different trades?
Time? Huh? Go to add entry time.
Oh.
And then you just type it in.
My dog. And 3.
Yep. And then you have to take PM. And then it'll just run it twice.